Firstly, Happy New Year, everyone, and I hope we can help you grow your portfolio over the coming year. Now, this is a time when market commentators get their crystal balls out and start predicting what financial markets are going to do for the rest of the year. We are not going to do that. What we do at IQ is we gather lots of data, leverage processing power, and run analysis on it all to find dislocations between macro information and the price of all sorts of assets. By macro, what I mean is economic growth, inflation, interest rates, energy prices, the dollar, and a host of other factors that we know impact all stock and equity index markets. Screening across global markets, what we're seeing right now is that MDD, the ETF that tracks the UK 250 index, really stands out, and this is why. Now, this gap tells us that what's really driving UK equities lower right now isn't information, but it is sentiment, and sentiment has clearly soured, but it's not justified by the macro fundamentals. Now, the other thing that's really important is that this type of gap is an extremely rare occurrence, and we've only seen UK equities this cheap to model a couple of times over the last 15 years. So the bottom line is there seems to be value in UK small cap equities, but it's really important to understand that sentiment can stay sour for a while. And the other thing that's really important is to know that these types of valuation gaps take 1 to 2 months to close. So this is not a day trading view. This is a bullish indication over a more medium-term horizon. And I'm going to leave you with one final statistic, and that is whenever we've seen this kind of valuation gap over the last 15 years for MDD, a bullish position has been successful about 70% of the time. Good luck out there.